Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of speaking with Lobo Tiggre, the independent speculator himself. How you doing today?
Just great, Darrell. I'm in Vilnius, Lithuania, where I've been recharging my batteries with my annual teaching gig. So I'm feeling great. And as you and I speak, gold futures just hit another nominal high. I saw 15.14, and silver with a 40 handle just before we went to record. So I'm a happy wolf. Not the wolf of Wall Street.
I had to go ahead and pull out my Scrooge McDuck pop doll out the box. So Scrooge is just rolling in gold, and this is exciting. I kind of wonder if it's gonna hold. So actually, I think we should probably look at the charts really quick just to see, what are the charts saying here. So here I have gold up on the daily, and it's looking at the last 4 months, and so. Just want to get your take here. I mean, obviously, it's been hitting that resistance level around 34.50. It's tried to press through that multiple times. It's failed to around 3,300 a few times, and bounced back. So it's kind of been trading in this channel. What's your outlook when you see this chart?
Well, that last candlestick on the right looks a little bit more like conviction to me. But if you can pull back and look at a year chart or so, or actually, do me a favor and pull back and bring us like a 5-year chart. Let's look at 2020.
All right, I'm gonna jump to the. Okay, so if we're looking at 2020, we are around here. This is on a daily, or actually on a weekly.
That's fine. It's close enough. Doesn't matter. I mean, this shows what I want to say, and I don't have control of your mouse, but where it's pointed right now, and the audience can see, there's this big ramp up to that big breakout there with the COVID pandemic and the lockdowns, and they denied it until they were blue in the face. But anybody who was paying attention could see that the response was going to be inflationary. That inflation was. No surprise to anybody whose job wasn't to lie in public, I think. But anyway, so when that happened, there are all kinds of people saying, oh, this is 2011, 12 all over again. It's just gone up too much, too fast. It's got to crash back down. And guess what? It consolidated and made this other big move that we've now seen over the last year and a half. Now, So you could say, okay, well, now this time's really it. But if you remember the chart that you started with, that peak on the right is actually sideways for months now. Mm-hmm. Yeah. Yep. This is not at all like 2011. It is not like 1980 either. I mean, if you're, no, sorry, my young brother, you're not going to remember 1980. I do. I was just a kid, but I was in the market. I was buying silver, not gold, with my lawnmower money, but I was in the market, and I remember 1980, and that peak lasted less than a day. That $855 peak lasted less than a day, and the $800 peak lasted less than a month. It was like $600 shoulders on that puppy. So what you're looking at here is really significant. And now this doesn't prove that gold's going to the moon or 10,000 tomorrow or any stuff like that. Don't put a clickbait headline on me, Darrell. But it does mean these people who are like, oh no, it's gone up too far, too fast. Therefore it has to correct. Well, they were wrong in 2000. They were wrong earlier this year. And I would caution anybody against believing anybody right now that says, oh, This is it. It's gone too fast. It has to break down. That is an insufficient argument. That would need to come to me with something like, what's changed? Why would it? And I don't know how far down this rabbit hole you want to go, but just real quickly, I think the central bank buying that started under Biden with the weaponization of the dollar in response to the second invasion of Ukraine, I think that's an absolute game changer. You don't just have deep-pocketed investors. You've got freaking sovereigns out there, the deepest pockets of them all, buying gold like there's no tomorrow, which, given the geopolitical news, there might not be. Who knows? all I'm saying is this is a very different market than we've had in the past. It's very dangerous to assume, things that you've seen in the charts in the past must prove, therefore, what happens next. And given that new reality, given that game changer, I've been saying all year since we hit 3,500 the first time on the futures that, as peaky or toppy or whatever you want to call it as that seems, I just don't see a lot of downside risk. There's a huge pool of money that's a determined buyer in the space, and that has obviously changed the game.
Yeah, agreed. Yeah, sometimes there's these moments in, I don't want to say history, but in my own life history, where I remember at the Rule Symposium in 2023, the sentiment was just a lot different than what it is today. People were trying to get capital, things of that nature, and there was concerns about if we're going into recession and everything. And I just remember, like, even here, gold fell significantly to about 1,800, and I went in buying, but obviously hindsight is 2020, and it's like, dang, I should have went in buying more than what I bought. I remember that, and it just never looked back. Like, it never looked back to that price range. And then, as you can see, like, it got above $2,000 and just kept breaking out upwards. And so, sometimes when something is cheaper than what it should be, when you're looking at the intrinsic value of something, you may have to load the boat.
Yeah, I hear you, and I agree. But sometimes, should is just such a loaded word for investors, Darrell.
Yeah.
Mr. Market doesn't do what we think he should do. I wouldn't just say a lot of the time. I'd say most of the time. And actually, that's what creates space for speculators like me. Mr. Market gets crazy FOMO and gets overenthusiastic, chases asset prices to ridiculous level. Bitcoin. No, I didn't say that. And there's an opportunity in that. Or he gets panicked. He gets just dumps out all the babies with the bathwater. And there are huge opportunities in that too. Long or short, Mr. Market is a psycho. And he's always flipping over manic and over depressive. And if nothing else, never mind, the intricacies of the palladium market or met coal or whatever, just that one thing, it's a reliable thing. And as a speculator, there's the holy grail as a speculator is anything you can rely on. And you can rely on Mr. Market going too far, one direction or the other. And if you can be patient, buy low, sell high. That's the formula.
Yeah, definitely. So, like, looking at gold, before we transition to the silver chart, when I was looking at these levels of resistance, I kept thinking about, like, multiple headlines that kept coming up, big news headlines, and the price of gold shoots up, temporarily comes back down, then levels off, and it trades within this range. And this move that we see today, it really, I think it really shows, like, the fundamentals of, like, okay, gold is going higher because of multiple different factors, not because of these one-off headlines. The U.S. sends bombs over Iran, or and so it shows the fundamentals are very strong.
That's right. I would flip it slightly backwards. Instead of looking at the resistance, I've been looking at the floor around 3,300 plus or minus. And for something to go, look at this chart you've got on there right now. For somebody to go screaming up to 3,500 and then correct down to around 3,300, things being as they were before, I probably would have been having, rotten tomatoes thrown at me and people saying I hate gold or I'm a fair weather friend or something, because I probably would have been saying, guys and gals, 3,500, that's a CPI adjusted all-time high. A correction here would be reasonable to expect. And it's made me really nervous all year long that I haven't been doing that. I'm usually the guy who gets booed for saying, look, hockey stick, it's time to take some profits here, right?
Yeah.
And I haven't been saying that. Well, I do always say you can't go broke taking profits, but I've been saying that, again, flipping it upside down, instead of looking at the resistance, I'm looking at that floor. And to me, it's striking that we have seen a lot of headlines all year long that until recently would have been very bearish for gold. Things that would, smack the gold around, whether it's, the flip-flops on the tariffs or whether it's the Fed doing this or not doing this. And every time that happens, we get a little drop, Darrell. Instead of saying, 3,500, that was the peak and now it's going down, it seems to hit a floor, and I think it's the central banks. Now, the central banks, they're not going to send it soaring super high. They're not trying to make it go higher, but they're not stupid. And if they see a sale price, then they're likely to take advantage of that. So I'm not expecting the central banks to send gold over $4,000 an ounce or whatever target you like. I'm expecting central banks to keep it from melting down too much, and that has stuck all year. I'm expecting inflation, chaos, geopolitical turmoil. I'm expecting those sorts of things to push monetary and safe haven assets upwards. So my bull case is not the central banks. The central banks is sort of my bear trap, or my bear protection, if you will.
Yeah. Yeah, it's like central banks aren't going to allow the price to, because that would pretty much diminish a lot of their, I guess,
allow is a loaded word, my friend. We'll see. It doesn't look like they have all that much control anymore. But I don't, if you're a central bank buyer, you don't have a weekly deadline to meet or something like that, or you don't have a quarterly, investors to face or something like that. You have instructions from your sovereign. We are worried about the dollar. We want to diversify X percent of our reserves and resources into the, out of the dollar and into hard money. That gives them a lot of latitude as to when and where and how they execute. And if they're not stupid, they're not going to feel FOMO. They're going to be buying the dips.
Yeah, for sure. All right, so just transitioning to silver real quick. Silver's been, y'all excuse these ranges I had on here for a long time, but silver's just roaring. It's a little, obviously, more volatile than gold, but 40, 78,
Yeah. Just a 40 hand at all. That's a wonderful thing to see. I have not looked at platinum and palladium and other expensive silvery metals today, but I bring that up because the recent run up you've got on the chart here for silver, when that happened, gold wasn't moving. However, those other silvery industrial metals were. So I've been not bearish on silver. I know people like to call me Dar Silver and all that stuff. I'm trying to be objective, right? And, when that big silver move happened up to 39 before, gold wasn't moving. So it was hard to make a case that was on the basis of a monetary metal response or a safe haven response. And other industrial metals were moving. So it looked more like silver's industrial side. Today, again, I haven't looked at those other silvery metals, but today it looks to me like gold and silver are moving together clearly. And that's great news. I'm always encouraged when I see that Mr. Market remembers, silver is also a monetary metal.
Yeah, for sure. We've got 3 of the best porphyry copper targets that I've seen in the past 25 years of exploring for porphyries. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. We've put our foot on 2 outstanding projects in central British Columbia with copper and gold and some molybdenum in there. Our Poplar South project, we're drilling there at the moment, and I think we're on the verge of a major discovery. If you want to learn more, you can find us at vizslacopper.com.
So just thinking about a tweet that I saw, you just shared this tweet, and I'm just going to share it for the audience as well. This was one of your subscribers here, and they were showing like the returns of your investor newsletter, Independent Speculator. And so I want to talk. So you did a course for the Commodity University on mining 101 and such. And so obviously you're doing a lot of due diligence. Your tag is Mr. Due Diligence, the due diligence guy. And so to get these type of returns, you're obviously looking for certain things within companies and such. And so I do want to go through that a little bit, because I mean, 193%, 148%. I mean, that's just unthinkable for some investors, unless they've been in like some meme stock or something, right? And so
you're very kind to bring that up, but I gotta say, for gold bugs, this could be sneered at as a kind of crappy portfolio. Where's the 10 bagger? Right? There's none on there. And I'm not just bringing that up to being humble. I'm actually answering your question. Okay, there's no 10 bagger on there, but there's also only one in the red on there.
Yeah.
And that's not an accident, right? You know, the way that I do that, this is the answer to your question. The way that I do that, the specialized sauce is to avoid the meltdowns and the disasters. Unlike my mentors, my teachers, who always said, you know, you're a speculator, this is risky stuff. You have to understand that you're going to lose money on most of your trades, and the 10 baggers and 100 baggers or whatever, they'll more than make up for your losses. I understand that logic, but I also understood over the years that most of my readers couldn't stand it. They just, you know, they would end up buying high and selling low because they couldn't take the heat. So I have altered my method. I'm actually trying to win most of the time. Now, and that means I'm not swinging for the bleachers quite as much, to be perfectly honest. It also means, though, that, you know, my success rate is much higher. So, but as you can see in there, that doesn't mean I'm aiming for you know, just to beat the S&P with a 9 or 10%, right? I'm still looking for the big gains on resource investments. But this isn't even a Loboism, you know, Darrell. This is something you listen to Warren Buffett even, or Howard Marks, or you know, famous investors like that. Everybody's doing the same thing, or you're competing against your peers, and it's arrogant to think that you're just so much smarter or so much better at due diligence than everybody else, and you're just going to outperform everybody else. Maybe you have a good year and you can. But the thing that you can do is avoid the big meltdowns.
Yep.
And maybe that's really my real specialty is, you know, I can smell these things coming, and people request coverage on these companies, and they're getting a lot of promotion. People are excited, this super high grade drill intercept. Yeah, but it's only over 5 centimeters. or, you know, this old mine, we got it super cheap, and they spent $200 million building it, so all we got to do is print money from the... Yeah, well, they spent $200 million, and they shut it down. That tells you there's something wrong with this project, right? So just, if you can lop off the worst underperformers, then by mathematical definition almost, you will outperform the average. It's really that simple. And this thing you brought up, I think that's a graphic representation of that.
Yeah, for sure. So you mentioned, you know, where's the 10 baggers? How much of this depends on when you get in? So, for example, we haven't seen the huge institutional money, you know, come into, you know, these junior companies and such. Which, I mean, you could see all of those could potentially be 10 baggers at that point, especially depending on how much euphoria and FOMO, you know, comes into play. And then also, it also kind of depends on when you get in, because Rick Rule always says the easy money has been made. And so just want to get your perspective there, factoring in those points.
Sure. Well, I guess it depends on your investment time horizon and your patience, the kind of investor you are. But if you're willing to have a really long-term view of this, Darrell, like the famous Baron von Rothschild quote about the best time to buy is when there's blood in the streets, that kind of happens once in a generation. So, I mean, that's a really long-term view. I mean, most people, you give them a 25 to 50-year investment plan, you know, that's not going to, I wouldn't sell a lot of newsletters with that kind of investment time horizon. But I'm not just being theoretical here. I remember very clearly in the crash of 2008, Tech, Cominco at the time, it wasn't just Tech, it was Tech Cominco. And that dropped from $50 and change to $3 and change. And, and I remember going to my bosses at the time, I was like, look at this. I know we're not excited about copper right now, but it's freaking Tech Cominco, and it's on sale for $3.13 or whatever it was at the time. And the consensus was, yeah, but this is crash of 2008. Industrial metals, they're going to suffer under the economic woes to come. And tech had some issues with its debt covenants at the time. So there's all these reasons not to, to worry and not go there. But I'm like, yeah, but it's Tech Cominco, right? It's like on a 90% off sale. So we didn't buy it. We didn't recommend it. But I remember because that puppy went to like 66 and change after the rebound after 2008. So this wasn't some fly-by-night junior that got lucky on a drill hole or something. This is, a major producer, and it was a 20-bagger, right? So, okay, that's one time, 2008. It's almost 20 years ago. So, obviously, blood in the streets requires a great deal of patience. But I bring that up because it's real. This really does happen. And by the way, for the younger people in the audience, if you think cryptos are the only place you can get 10, 20 baggers and 100 baggers, that's actually not true. It's not an everyday thing. The volatility in mining stocks, which Doug Casey used to call the most volatile equities on earth. Well, crypto is a lot more volatile than even the crappiest little junior mining stocks. But it's simply not true that crypto is the only place you can get phenomenal gains like that. I've just given you one example with a major company. And obviously, if you want to go for a legendary 100-bagger, then yes, you need to get in early to your question. And, my mentors, a lot of the positions that they did so well on, they got in on a private placement or basically the equivalent of the seed round. And that helped to bag these gains. The problem with that is that the average retail investor doesn't have those same opportunities. And you know what? Going back to the previous point, frankly, Darrell, I've never had a 100-bagger. I think the most I've ever gotten on either a pick or an investment has been on the order of 25x. And I'm fuzzy on that because it kept having spin outs and free shares in the new company, and then so that story isn't actually over yet. So what I'm saying though is I've never had a 100-bagger. I've never even had a 50-bagger, and frankly, I don't know that I ever will because of what we were previously talking about. If I was throwing a really broad net, buying everything that looked exciting, not everything, not completely indiscriminately, but a really broad net, a really big basket or a really big shotgun spread, whatever you want to call it. If I had the resources of a Doug or a Rick to do that, then maybe I'd be able to bag some of these 100 baggers. But I'd have to accept that I would lose money on so many. And I'm just not willing to go there. I hate losing money, and my readers hate losing money. So I'm fine with 5 baggers and 10 baggers, frankly, with a much higher success rate.
Yeah, for sure. As Rick would say, there's multiple ways up the mountain. So just thinking about, you mentioned earlier, we had a conversation earlier this year, and you mentioned bracing for volatility. And just thinking about volatility, you mentioned 2008, where you have this resource stock goes from 50 to 3 and then back to 60. I mean, that's a huge amount of volatility. And so what was the sentiment like then? Were folks just getting out of their gold or getting out of their, their equities at that time? I mean, because uranium was running up till 2008 and such. And so I'm just kind of wondering what sentiment was around that volatility, that level of volatility.
Yeah, well, during 2008 itself, obviously, there was a great deal of panic and upset. What really killed me, to this day, this is a lesson that I carried away, and it influences how I do things and the guidance I offer readers, because I remember, we did a lot of education back in my Casey research days, and we even talked about, a financial crisis coming and monetary regime change, I think was one of our expressions. We were talking about this in 2007. So we saw the trouble of 2008 coming, not exactly the way it played out, but we knew something wicked this way came. And I remember my contribution to that, my call was actually in late 2007. I basically emptied all the industrial metals plays out of the portfolio. and we were just gold and silver, and maybe some uranium, but not 100%, but basically cleaned out the copper and everything else from the portfolio, which in 2008 turned out to be a great move. That really helped a lot. So 2008 happens. A lot of people are very upset, but our readers, they were somewhat prepared for it. And the problem became actually that, the stocks went off and gold got sold for the wrong reason, right? As a liquidity resource. It got squeezed temporarily in 2008. And then a lot of our readers were ready for that. They expected that. So they started buying. But then it got worse. It's like it fell off the head onto the shoulders, and then it fell off the shoulders onto the lap, and then it fucking hit the floor. So along the way down, we had a lot of people averaging in. So by the time the actual bottom came, a lot of people were liquid. And that was agonizing. I remember the agonized emails from those days of like, I get it, I see it, I'm sure it's going to rebound, but I'm all in. I can't take advantage of these bargains, and that has had a strong impact on my own ways going forward. But we're nothing like that today, and even in the corrections we've had since 2020 and the big breakout for gold, never mind the new one, the attitude hasn't been there. Instead of just storytelling, let me tell you something that I think might be more useful here for the audience. In 2011, 2012, after that big run up in gold, almost to 2000, and then it waffled, volatility sideways for a while before going on that horrible 5-year slide, right? When that happened that year, the gold stocks led the way down. So the market sentiment when gold was going up and it went over 1,900 an ounce intraday, the market sentiment was actually very positive, but the industry insiders or the smart money, if you will, they had already turned bearish, and the gold stocks, I repeat that, led the way down. This time it's very different. The gold stocks have been kicking and screaming upwards. The metals led the miners in a big way this time. There was a lot of suspicion, I think, because of what happened last time. So it's only been recently that the miners have really started waking up, really over the last year, maybe year and a half for the better ones. But in the last couple quarters, even the not so better ones, I'm trying to be nice here, not get sued. A lot of the ones that are not the ones most famous for excellence of operations and high margins, even those have started delivering the leverage to the underlying metal, which is our reason for buying them. So I think this is a measurable phenomenon, and it is different. It's telling us a different signal. Instead of the gold stocks leading down right now, the gold stocks are still playing catch up. And this doesn't prove anything. I'm not saying that, 100 times out of 150 cases, that's like, I don't have statistics. All I'm saying is that it's different from last time. And to me, it's a bullish signal.
Mm-hmm. How different would you say obviously in 2008, we actually went through a bear market or a crash, or however we want to define that. And the Fed did come in to the rescue, but it took a while for these equities to recover. Now it seems like whenever we have some big news, whether that be, the COVID crisis, Silicon Valley Bank, war, tariffs, these markets are selling off for like 2 days, and then just rallying back to the all-time high again. And so I'm kind of wondering about that. That's been like one of my concerns. Is like, okay, how sustainable is that? Because typically something would drop the market, historically, and then it would stay, in a depressed state for a number of months, years, or whatnot. And we've just been getting back to an all-time high. And so I've just been kind of thinking about that. What's your thoughts?
Yeah, well, never say never. I mean, the markets have rolled over as you and I are speaking. Gold's up $40 an ounce, silver's over 40 handle on silver. The broader indices have rolled over and they're all in the red. This could be it, Darrell. This could be the beginning of the next big slide. But it might not be. Every shock that we've seen, as you've just outlined, has failed to deliver that. And I see this as a sign of what, I don't know if you've interviewed Michael Howell, he calls global liquidity, or Lynn Alden, fiscal dominance, or my simple, humble wolf, I just see the money helicopters in the sky. But basically, trillions and trillions of dollars thrown at these things. And that has to have consequences. And it has clear consequences for monetary metals, but it's also inflationary, which has consequences basically for anything real, anything you can't print. So, and it's an interesting thing. As bad as 2008 was, and I remember Bush sent people stimmy checks, and they're like $100 or $80 or something like that. I mean, nothing like the thousands of dollars that we sent in response to the COVID lockdowns. And I don't want to get Trump fans mad at me, but just ask yourself, whether you love Trump or hate Trump, doesn't matter. Ask yourself, do you think this president of the United States is going to sit there and let a recession happen without ordering the money helicopters redouble their efforts? I mean, this just doesn't look like something that this president would do. He's making America great again. He's said on TV that we now have the hottest economy in the world. That's been his mantra for months. We got the hottest economy in the world. If anything starts looking not so hot, you think he's just going to sit on his hands? Of course not. Yes, that's a forward-looking statement. No, I don't know the future. I'm just
he
calling
did
the
sign
odds,
those checks in 2020.
Yeah, the COVID thing started under Trump. So all I'm saying is, by the way, and it's not just America. Europe is going to spend €1 trillion on rearming. That's kind of scary by itself, but that's a lot of money, and that's also inflationary. And China, they have been running stimulus after stimulus since the COVID lockdowns. That hasn't stopped. And Russia's got a wartime economy, that's always inflationary. So money printing up the wazoo around the world, it's not just a U.S. thing. And if there is, some element of Trump shock that really does put the economy in a tailspin, we've got an important labor report coming up. Not a true labor report necessarily, but I think an important one, because those numbers have started to break down. And while the jobless claims in the U.S. haven't been record high levels or anything like that, the continuing claims have been very high, at their highest levels since the COVID lockdowns for a while. It's like this huge wave of companies so far seem to be holding on to people, not firing people so quick. But when they do lose them, they don't replace them. And it's hard for people to get a new job these days. I think the odds are this will show up in this coming labor report. And whether that sends markets into a hissy or not, who knows? Bad news can be good news. And if I'm not the only one, I'm sure, who thinks that the response from the White House will be more easy money. And remember, Trump still controls Congress too. So even if the Fed drags its feet and says, "Oh, inflation is high too, so we don't want to get too easy too quick," well, that's not where all the money helicopters are parked. There's some of them on Capitol Hill as well. So anyway, all I'm saying is, if there's a big market kerfuffle, I think they're going to throw even more money on it, and that's game on for monetary metals anyway. If there's no market kerfuffle, what's going on is already inflationary, and that's maybe not as dramatic, but still very bullish for monetary metals or safe haven assets anyway. So either way, I'm very bullish on gold and silver. After the kerfuffle, as you know, I'm also very bullish on copper and uranium. Anything else? I want to see how the market shapes up.
Yeah, definitely. And, to piggyback off what you said just a little bit, the initial news of tariffs, I mean, he was speaking about it in this campaign. I guess people just didn't know how serious he's going to take it. And then, the retraction of some of the comments and such, and putting on tariffs, taking them off, putting them on. It's like wax on, wax off, Mr. Miyagi, tariff on, tariff off. But some of the companies are like, how do we even plan around this? And so I noticed that some of the companies were doing like some hiring freezes, or if they did lose an employee, they weren't replacing them because they didn't know how could they project out their revenues and such if they don't know what the policy is going to be, you know?
Right. I mean, you're going to build a refinery, let's say, because Trump is encouraging that. That's going to take longer than the rest of Trump's presidency. And what if the next president doesn't like hydrocarbons as much as this one does? You know, it's very difficult to and this isn't just, you know, chump change of an investment decision. Even for the biggest oil companies in the world, building a new refinery is a major commitment of capital. It's just really hard to see committing that kind of capital, even if Trump is true to his word for the rest of his presidency. That's simply not a long enough time frame for that decision. You really are taking a leap of faith if you do it based on that. And again, that's not even a criticism. I would like to see more energy produced in the United States.
Yeah.
So I'm not trying to knock the agenda. I'm just saying, as a business person, you need to be realistic about these things. There is an investable side of this, though, Darrell. If you've got a shovel-ready project in the United States, especially if it's one of these critical minerals, and by the way, the original White House EO on critical minerals included uranium and gold, the two yellow metals, so that made me very happy. This most recent one, just this last week, included silver for the first time. So silver bulls, you know, rejoice. You're no longer left out in the cold. Somebody finally realized that silver is a critical mineral too. So yeah, if you've got something that's shovel ready, you know, unless it's one of these giant, you know, world-class multi-billion ton, you know, mega deposits, that could be built and start cash flowing during this presidency. So that is material. Or even if you're not at that development stage, if you've got a real discovery that's going gangbusters, and now you're going into the permitting phase, well, this administration can accelerate that permitting phase. So that boring engineering phase that people get stuck in between, that can be shortened to the benefit of investors in those companies here. You know, just getting that unlock of getting to that permit before Trump's gone could make a big difference. So I'm not poo-pooing the whole idea that you know, Trump's agenda is bullish for various minerals and the companies working in them. I guess what I'm saying is one size doesn't fit all. Rising tide doesn't necessarily lift all ships. So due diligence is still required.
Yeah, definitely. So just thinking about some of the companies and how you pick your companies, are you mostly into like early stage exploration? Or are you just across the spectrum? Are you into royalty and streamings, open pits? Like what's kind of like your jam, or are you all of it?
Well, no, I'm not. And to your first point, I personally never bet on early stage exploration. Like pre-discovery, I just don't go there. Yeah, you know, again, if you're a Rick Rule and you can afford to buy 100 stocks, then yeah, you might be able to bag some of these before they make that discovery. But not Rick Rule, not Doug Casey. I'm not throwing my friends under the bus. Like, they'll tell you they don't know who's going to make the next big discovery. That's why they have such a big shotgun to shoot a wide angle there. You know, I'm not in that position. Neither are most of my readers. So I'm willing to give up that initial spike on the Lassonde curve of that first discovery in exchange for higher odds of success. And you know, that first part of the Lassonde curve, still in the early stages of development, that's not just the discovery hole. It's not discovery hole and then boring engineering and then you build a mine. There's a lot that goes on in there. That first surge in share prices, that's discovery hole, next round confirmation, you know, drilling, definition drilling, infill drilling, getting to a 43101 resource or JORC resource. You know, there's a lot of work there. And in that phase, if you've got something real, like the geologists have figured out, it's a vein, it goes like this, so we drill it this way and we'll find it. Or it's a disseminated deposit, it's oriented this way, so we'll drill it and we'll find it. When that works, when their model works, and every batch of drill results delivers the goods, I call that success in progress. And you've missed the early exploration, great success of that first hole. But nobody knows when that's going to happen. Whereas if you've got success in progress, you can see it. It's happening now. And okay, maybe if you jump on that bandwagon, 2 or 3 press releases into it, you miss the early money, the easy money, maybe as Rick might call it, and you only get a double or a triple instead of a 10-bagger. I'm okay with doubling or tripling my money, Darrell, with much higher odds of success than buying 100 companies and hope one of them hits the next mother hole. Oh, sorry. I didn't fully answer your question. I kind of jumped on that early part. So that's my answer to why I don't personally invest in pre-discovery exploration. If I really, really wanted to go there and try to, get once in my life a 100-bagger or something, then I would have to go there. And then what I would do is I'd buy a prospect generator. Because at least that way you're defraying the risk with other people's money, and they can go for a long time without diluting me as a shareholder because they use that other people's money. But I prefer the success in progress stage. My other favorite investment type is the pre-production sweet spot, that difference from, spending money exploring to making money producing, that gets a re-rate in the market. It's not 100%, but it's highly predictable, and the gains in that space are substantial, on the order of a double. So I really, really like that. I'm also willing to look at producers. If they're solid, they're consistently profitable, and they have clear growth on tap, and I'm bullish on the commodity, even a larger producer can give you a double. Like the blue chips in this space, and you know who they are. They will easily double between a cyclical low and a cyclical high, and as big as they are. So it's all about putting the odds in my favor. So I try very hard to do that. And if that means fewer 10-baggers, so be it.
Yeah. So how are you balancing that greed versus fears, like the yin and the yang, as an investor? So obviously, the greed can cause you to, go all in, but got a hunch, bet a bunch, right? Or maybe you experience some significant gains and you think it's just going to go higher. You don't take any money off the table. And the fears, like, I'm getting out of this asset. I'm selling everything. I'm done. How do you balance that as an investor?
I have a method for that, actually. I don't think I'm smart enough to be able to know when the top is in, and as we were saying earlier, sometimes Mr. Market just goes psycho, and let's say that they have a really nice little high grade discovery, and that could be worth $1 billion. That's a nice little gold mine, right? And the market just gets so excited by the high grade drill results, the market cap during the exploration phase, they haven't even done a feasibility study on it, the market cap goes to $2 billion. Well, clearly, I'm not going to be piling into that, and I'll be thinking about the exits. But even when that happens, when Mr. Market gets the bit in his mouth, it just runs. It could go to 3 or 4. Stupid high prices don't prevent stocks from going to even stupider, more ridiculous prices. So Mr. Market likes to hit that ludicrous mode from time to time. So I have a method, I call it the upside maximizer. And there's a free report on my website. You can use a little, magnifying glass there to search for upside maximizer, or look for it in the free report section. And it's pretty simple. My mentor, Doug Casey, taught me that the way to mitigate risk in this very volatile sector was to sell half on the first double. If you sell half on the first double, you can't lose, and you can sleep more easily at night. The problem with that is that if you sell half on the first double and you get a 10-bagger, but if you sold half on the first double, it's only a 5-bagger. And I certainly heard from a lot of readers who were not happy about having sold half on the first double on that basis. So I've modified it. Instead of selling half on the first double, I start putting a trailing stop on it. So as long as it's ripping higher, it just keeps going. But when it starts rolling over, then I get triggered, and I can either sell entirely, or I can just take the profits and leave my initial stake on the table, or I could just take my initial stake and leave the larger amount on the table, depending on how I feel about the market or the particular company. That's a pretty idiosyncratic is the word investors like to use these days. But if you do it at all and you cover your butt with this, then you can avoid losing money. And to your question about getting out at the top, I don't know where the top is. But if my upside maximizer is triggered, then I don't have to know. I don't have to be smart enough to know where that is, right? The math will get me out, and I just sleep better. So like, if let's talk uranium for a second. I expect uranium to go higher, but I don't expect a 2007 type spike. And at some point, high prices will cure high prices in the uranium space. And I honestly, I don't know where that will be. I am pretty sure it's still in front of us. We have not seen the highs for uranium this cycle. And that's exactly when this method, this upside maximizer, will help, I think, because I don't have to know where it is. But if uranium is ripping higher but there's volatility and my upside maximizer triggers start getting hit, then I'll probably not sell a lot, not sell completely. I'll probably just recover my initial investment and let the rest rip. On the other hand, if uranium's gone way over triple digits again and it stayed there and there's a lot of new mines coming online, let's say this is, a year and a half or two down the road, and the market feels more mature and it feels like, high prices might be starting to cure high prices. If at that point my upside maximizer triggers get pulled, I'd probably sell the whole thing. And this isn't a very, clean, tidy, put it in a box, put a bow on it, and don't have to worry about it at all. But it sure beats guessing or second guessing the market. And, I execute these triggers pretty mercilessly. And at the very least, I get my money out of harm's way. And if I'm at all concerned about the market, I probably do more than that and lock in my gains.
Mm-hmm. Got it. Thanks for sharing that. So just want to segue to uranium. So there's been multiple things, multiple headlines as such. I think the recent one was out of Kazakhstan. I think it was Kazatomprom mentioned something about production. And then there was there's been kind of these interesting dynamics with some of the nuclear related companies. I mean, obviously, uranium is the natural resource out of the ground. These nuclear reactor developers or micro reactors and such, they need the uranium. But some of these government contracts have been signed. I mean, we've seen it across the rare earth space too. I saw it with Centrus Energy. I was buying Centrus at $55, just expecting to do a trade. And then it goes up to, I double my money and I get out and it goes up to $200 or something dollars. And so it's just like,
right,
okay.
So let me jump in there because that reminds me of something. One of Doug Casey's famous 100-baggers was actually VRIC. And I'm not saying Centrus is VRIC. Don't excoriate me here. I'm just saying, he bought VRIC at like $1, and when it was about $125 a share, he looked at it and I remember reading the write-up. I wasn't with him at the time, but I remember reading the write-up in the letter. He says, this thing, it's an exploration play, and it has a market cap that's bigger than Freeport-McMoRan at the time. And he says, it's time to start thinking of heading for the exits. So he put his sell signal out at around 125, and darned if that thing didn't go to 250 before geologists started jumping out of helicopters and all that other fun stuff from that scam story. So, better, a 100-bagger was okay. He didn't have to have a 200-bagger. And if he had held on until the scam was realized, then, he would have lost all those gains. It would have, a day late would have been way too late. So I'm not saying Centrus is going to blow up, but you know what? You doubled your money in short order. That can never be taken away from you. And whatever happens next, you'll sleep well at night.
Yeah. Just let it go. Let it go. So there was other companies like Oklo and such who, they're doing these projects, they're getting these government contracts, and you're seeing the stock price just shoot up, and it's just like, okay, have they started producing the results, or did they finish the product and started getting revenues and sales?
I don't want to give away free analysis here, but there is, I think, a bit of putting the cart before the horse or paying in advance. Some of these are still pretty much science projects, or they're technically producing some enriched uranium, but not in material scales yet, so it's tricky, and a lot of people confuse. I mean, the nuclear fuel cycle is long. I mean, it's like years going through all this stuff. You could probably get a much better definition of that from Justin Huhn, the uranium insider, than me. But what comes out of the mine is not what goes in the reactor. Well, I mean, the Canadian CANDUs can use supposedly natural uranium, but let's not go there. But the nuclear fuel that we're talking about, certainly for the advanced nuclear reactors and for most of these high-pressure water reactors around the world, it is, multiple stages of processing beyond what comes out of the mine, and it's time-consuming, and that's why we have all this, underfeeding and overfeeding and the centrifuges and all this stuff that makes a difference to these other prices. So this is, if nothing else, dear audience, keep this in mind. When you see the United States government subsidizing, enriched uranium fuel for these new advanced designs, that's a long way from what comes out of the mine. So like the news that you're talking about, Darrell, this latest press release, it included some significant subsidies along these lines, but this was for the later stages of the fuel cycle. So I'm not saying this has no impact whatsoever on uranium miners, but it's a long way down the road from there.
Mm-hmm. Yeah. I mean, because, looking at the uranium equities today, they were up significantly too. And then, well, I don't want to say significantly, but they were up. And so, some people may...
Somewhere. I looked at some. I saw double digits in some, and it's driving me crazy because I'm looking to buy. I'm trying to add to my uranium portfolio. I'm thinking, yay, the major stock market indices are down. This might be a good day to buy uranium stocks. No.
So do you think we're still early in this cycle, or are we mid-cycle? Where do you think we're at?
Yeah, as you said, Rick likes to say the easy money's already been made. We're definitely not in the stealth phase. And if anything, my whining just now is evidence of this. Not my whining, but the reason for the whining. The uranium stocks, even on bad days for stocks, they're holding up really, really well. And that tells me that, this is definitely no longer the stealth market. There's a lot of people with a lot of money out there that get it. So I think we're going higher. I can't say how quick, how long, or how high, but in my world as a speculator, I make money just getting the direction right. I don't need to peg my year-end price guidance or anything like that, and nobody knows all that. And I already own a lot of uranium, so I'm not feeling too much FOMO. But since I'm very convinced about the trajectory here, I really would like to have more. And I'm frustrated that even on days where spot uranium falls or retreats, and we had some this week, the stocks held up ridiculously well. And it hurts me to average up. It's like against my religion, if you will. So the answer for the audience is, if you're long already, if you're substantially exposed to this space, congratulations. I would encourage you to, maintain your speculator's discipline. Markets fluctuate. It's been frustrating in recent months, but, last year we got a huge fluctuation with nothing. Or even this year, when the DeepSeek thing came out, and everybody else said, "Oh, AI is not going to use any energy at all of a sudden. We don't need any more energy." It was, I'm exaggerating, but there was this huge overreaction in the marketplace, and that created spectacular buying opportunities in even the very best uranium stocks. And what was so beautiful about it, Darrell, was like, you didn't have to take your chance on some crappy junior that was still selling cheap or something. The best of the best went on sale for a completely stupid reason. Uranium didn't go over $100 in 2024 because of AI. We need that power anyway. So the whole DeepSeek thing just didn't matter. And it put the best of the best on sale. Those are the most wonderful market opportunities. When something like that happens, it's an absolute gift. Something goes on the deep discount rack for the wrong reason. That's when I want to have a garage sale and buy all I can. So, and this is recent memory.
That was a big one.
Right.
Liberation Day.
Right. So if you're long already, markets fluctuate. experience suggests that it will pay to wait for the next fluctuation. Now, if you're not long already, if you missed the last uranium rally, I actually, I'm not going to chase something on a day like today where it's popping, high single digits or double digits, but I would look to buy the next dip. If I had no uranium in my portfolio, I would not want to be in that position for long, because you never know when spot really will break out on its next leg upward. It's looking like it wants to head that way, so it may not be that long. So if I was completely left behind on this one, I would want to remedy that ASAP.
Yeah, definitely. Yeah, appreciate all of that insight and value that you have provided the audience. So just to wrap us up, I want to have just a short discussion on just kind of what you're up to and teaching youth around the world and such. I actually just recently did a couple of courses for financial courses for high school and college interns, and we kind of got into the nitty gritty of national debt and the state of like where Americans are with having, many can't afford $400 for emergency savings. We talked about the retirement crisis, how many folks are having to take care of an older adult in their life, and even with that, you have the sandwich generation, those that have kids and having to take care of an older adult and such. And so just really hammered home on the importance of preparing now. And we talked about the devaluation of the dollar and how much it's fell against gold and such. And so we got into multiple different things and I told them, like, we're not going to go through, you can learn how to budget. You can go to YouTube and learn how to budget. But this stuff we're going to talk about today is going to be the reason why, folks should consider preparing now. And so, I just want to get your take on what are you teaching and helping the youth consider?
There's so much we could say on this. Let me throw an optimistic idea at you, Darrell. I've been teaching economics and entrepreneurship in Eastern Europe for 25 years, give or take a few. The old brain cells aren't quite clear on that. And I came here because as a U.S.-based writer, and you go down to the local high school and give a talk on career day about being a writer, and the kids didn't care. They were there because it wasn't a real class and you weren't going to give them homework, right? And I came to Eastern Europe, and this was close enough to the fall of the Soviet Union that, these kids were absolutely starving for any real practical, useful information on how to get ahead in life. And they weren't capitalists, but they knew that socialism didn't work. And they didn't have an ism. They were just open minds, ready to learn. And I just loved it. It was great. Just these brilliant young minds, hungry to learn, and it was absolutely addicting for me. But the optimistic thing is, I'm starting to see this back on the other side of the pond, and I have to say, I think it has a lot to do. It's not Trump, sorry, and it's not the current crisis, sorry. It's actually the crypto crowd. The whole crypto phenomenon has educated, I think, two entire younger generations on the silliness of fiat currency, of why, paper for money is a bad idea. And okay, their focus is the crypto side. But once you learn that, there are implications beyond crypto. Once you learn, the reality of what happens if you let the state create as much money as they want, it opens up, maybe not a Pandora's box, because that's a negative metaphor, but it's maybe the scales fall from their eyes, Darrell, and it opens their minds to all kinds of other things. And I find it just so exciting to go to conferences these days, like VRIC's conference, last month, I guess, it's still August. And there's a bunch of young people. Okay, it's not overrun with young people, but there's young people there. It used to be, when I first started in this business, everybody had silver hair. And then I got really worried because after 10 years, they had no hair. And now I look at the audience and okay, there's still plenty of silver hairs and no hairs, but there's a lot of kids there with shocks of great big black hair, blonde hair, red hair, doesn't matter. And it makes me so happy. And I'm finding that there are brilliant young minds all around the world, including the U.S., where we have so much entitlement mentality, and one was tempted to just give up on the younger generations before. And now I see them asking questions and hungry for knowledge and open, even if they're not gold bugs or they think, I'm a boomer with my gold or something like that. They're kind of on my side already as regards fiat. And that gives us something to talk about, and we can compare notes. And most kids, they're not like, Bitcoin maxi religious types. They've got the speculators bug. They made some money on some cryptos, and now they're wondering, well, what else can I do? What else can I learn? And I just find this really exciting.
Yeah, for sure. Yeah, I had a couple kids come up to me after teaching the course, and they said, "Yeah, I made this amount of money on the crypto. What do you think? Do you think I should sell it or what?" And just so we had that conversation. But it was a good conversation, just being able to engage with someone who's open-minded and wants to accumulate knowledge and just think about their future. And because what we see today, it's, obviously you've been around longer than me, but, I think about my kids' future, and I'm just like, okay, yeah, I need to really invest in getting them prepared, for what may be coming down the line when the bills due. And so that's something that I've been passionate about as well. Well, Lobo, where can people find more about your work and such, and even connect with your newsletter, follow you, all of that?
Sure. Actually, independentspeculator.com. We have a free weekly digest that I encourage people to sign up for. You may or may not agree with me, but if you like the way I think, it'll show you how that works, and you can consider my paid services. But actually, the easiest and simplest way is probably just to sign up. Follow me on Twitter. I have to read the financial news every day and follow the markets every day anyway. So whenever anything interesting or relevant comes up, I post about it on Twitter. And that'll give you a pretty good idea real quick for, what I'm doing, what I'm thinking about, even what I'm considering buying and selling. Not individual stocks. People pay me for that. But the markets, that's free commentary, and you can see whether or not, you think I might be useful to you.
Yeah. All right. Well, you all have that information. Be sure to hit the subscribe button. Thank you for supporting the channel and this show. Lobo, appreciate you for coming on. Look forward to our next discussion.
Thank you, Darrell.